Good afternoon. This is Ken Long from Tortoise Capital, the evening of August 15th, 2009. I want to go back in this review, this case study, to take a look at a ready, fire, aim trade that we took on the 11th of August with Alcoa to demonstrate a technique of making opportunity trades that are timed with market conditions. So here's the setup that we saw as it was developing in the chat room. First, SPY had sold off hard all day. You can see it. SPY closed here the previous Friday, gapped down, and then failed all morning, all the way till noon, and then found a little bit of support, then another quick fail, and then in this yellow circle later in the early afternoon, we started to see some support in SPY, and it was starting to move off the pivot points. While SPY was failing all day, Alcoa, on the other hand, opened, and then there was buying pressure, pullback, buying pressure, pullback. And so what we saw was Alcoa and all of the base materials and the commodities had better relative strength all day than SPY. And so our reasoning was that if they were the daily leaders and had been making gains when SPY was failing, well, when SPY found support and was going to reverse and go north, well, then it stands to reason that some of that index and market strength could help Alcoa and the other leaders, make it easier to buy them. That was our rationale. And so when SPY started to find the support here in the yellow and Alcoa was postured to resume its move up, we bought. So this is an Alcoa AA setup, which is ready, fire, aim. So we're ready because we have been stalking and have a reason to buy Alcoa with tactical momentum. Fire, we trigger on positive price action in SPY and in Alcoa, and then immediately establish our initial capital preservation stop here. And then aim. From this point on, we're going to manage this trade carefully with our initial position, and we're prepared to exit on weakness and add a second position on strength. If we can get through 1275 or 1276 all the way up to 1280, then we're going to be very happy. It turns out that we were able to feed the dog with this trade that day. There was one more good surge left in Alcoa, and this is what happened next. We actually got a very good fill. So let me just recap on this new chart format for you. So here was the first surge up. We saw the first pullback, the second surge up, and the second pullback. And you can see what we have is lower highs. We're going to end up capitalizing on this third move up and sell on this little pullback. So let me clear that out for you. So this is this blue box is the trade frame that you saw on the previous chart, and here was our setup. So when we saw price action moving up, we ended up getting a really good fill at 1263. We felt like we could use a nickel trailing stop at 1258. So this is where we bought on this candle. We set our profit target at 1280, which was a previous high. We're hoping to get 1280. We had good moves immediately, an easy pullback, and then resumption. And we ended up buying additional strength here. This was a powerful white candle up, only a very trivial pullback, and then immediately resumption. That was our trigger to buy a second set of shares. It hit almost immediately thereafter, hit our 1280, started to see weakness in SPY. It didn't look like it was going to continue to go. SPY had been rolling over for 10 minutes. Alcoa had strength a little bit longer, but as it started to fail, could not make a new high and get through 1280. We exited getting a great fill once more at 1279. In the chat room, we immediately said we're going to exit at 1279, but if we see 1281, we're willing to reverse and go north because that would be a new daily high. Well, we never got 1281 the rest of the day. It closed out pretty much flat, as you can see. And so to recap the trade, ready, fire, aim, and Alcoa, our entry was at 1263. We used a nickel stop at 1258, which never was hit. Our initial target was 12.80, which gives us a 17 cents divided by a nickel risk is greater than 3-to-1 reward to risk. We decided to use $100 risk, small bullet, at 5 cents a share risk. It gives us 2,000 shares. Our second entry at 12.71 on an additional 2,000 shares. And so our exit at 12.79 as SPY starts to stall and fall. We get out of all the positions at once. We have a re-entry plan at 12.81, but it never fires the rest of that day. And we end up netting $460. 2,000 shares earned 16 cents, and 2,000 shares earned 8 cents, and minus some commissions. So we net 460 for a little over 40 minutes worth of trade management that day. So in a nutshell, that's the ready, fire, aim intraday, and shows the relationship between the market condition and a stock leader that day. So thanks for your attention.